Hello guys, good evening, good afternoon. Welcome back to another market review video series. Um, so today was it was quite an eventful day. Although the market was slow, it literally offered 100 and almost 20 points intraday, which is a decent amount of range. Um, so let's take a look at it. Let's clear everything. I'm gonna keep this part, but let's clear this first section. So initially, before New York opened, the market sold off and took out the sell side here, which is the sell side on the hourly. Here you can see that this wick here. So the market was already rated the sell side before New York opened in a bull market. So after that raid though, there was no S&T divergence, nothing. But I've noticed one thing during the live stream which gave me the intraday bias really, which was it was 5 minute, like all the time frames actually, not just here, not just 15 minute, but it was at the rejection block. On every time frame, we saw a rejection block after the sell side was taken before New York opened. So this one is on the 5 minute. This one you can see the same level on the 15 minute, and then there is you can see it on the 1 minute slightly lower, a rejection block, which means this literally indicates me that the set for the New York session, the low rather, was set for the New York session, so I was primarily looking for long entries. So that was the thing that gave me conviction for my intraday narrative. Pretty simple. So before New York opened, or like at the time of New York opened, there was a SIBI. We were trading below it on the 15 minute, which was my main point of interest. I was like, okay, this price needs to flip that fair value gap to make the run to the buy side, which it did eventually. But I'm going to take a little deeper look into what happened within that fair value gap on the 1 minute. So I'm going to annotate that with, um, let's change the color. What's this? Green. Okay, I'm going to keep that green and go down to 1 minute and hopefully walk you guys through the New York session. So here's the rejection block. This is the 15 minute. Here's the rejection block. Initially, it formed the rejection block, rallied, no displacement, but there are a couple of things like breaker blocks here and an order block there as well. This is the order block. When there's a rejection block, the highest probability PD array is usually the order block that causes the rejection block. So, that being said, the OB, not that one, but the down close one, is a very high probability a drawn PD array. So this is the plus bullish OB and its mean threshold. So initially, as you can see, the market came down to seek sell side first after a rally into the 15-minute PD array, but it failed to go below the sell side, which was expected, honestly. The only thing I wanted to see was because ES was um, I think it was weaker. I wanted to see an S&T divergence in between these lows where Nasdaq was not rating the sell side, ES was rating the sell side. That was a scenario that was going on in my mind during the live stream. It didn't happen. It rather respected the um, the mean threshold of the OB. So with that being said, as a potential target I had in mind was there's an S&T divergence here at these highs, which makes this whole accumulation and there's the consolidation, right? So this is the target for the buy model, and the market is here setting up for a potential buy model. So here, with the second manipulation, there is a SIBI here and a little bit of accumulation. Now that accumulation is not clear on the 1 minute chart, but on the 30-second, you will see it better here. This is forming a trap. So anything below that fair value gap, once it gets inverted, becomes what? It becomes a trap. Meaning the low of the trap should be safe because this is the smart money reversal. This is what's setting up the market for the buy model, right? So after the fair value gap was inverted here. You can see this candle inverted. Any candle afterwards is a long opportunity. Now it retested the fair value gap high and then send it. Now here, let me go back to 1 minute. Now here, for me, the highest probability safe entry is when market traded back down into the fair value gap here, which is silver bullet really. I want to take it as silver bullet, and then it formed an SMT divergence between the lows. So that SMT divergence, once it prints or as it prints, is the highest probability and the safest entry whatsoever. So I'm going to take that as plus SMT divergence, and then afterwards it ran towards buy side. Here also, before the SMT divergence, market formed a bearish SMT divergence for further pullback or further manipulation, which is the raid below the low. So here it rallied, kind of stalled at the buy side without taking out the buy side. However, that is not my main concern. That's not a concern really, because there are no like major PD areas here, maybe like an order block or something like that that is failing. Okay, there is fair value gaps, and there are two double fair value gaps, like the first one here, actually multiple, second one here, and then there's this one right there. So failure of any of these fair value gaps is not a concern because the order flow is not changing. So for order flow to change, it needs to go below the range EQ or take out the sell side, because that is the order block. This is the order block. Okay, so that being said, it came down and rallied afterwards almost immediately, and in that fair value gap there is a trap here which was utilized to run on buy side one last time, as you can see right there. Trap, inversion fair value gap, confirmation, comes down, rallies. Okay, that's a scalp position. I mean, I wouldn't take it personally, but some of you guys might be okay with taking 13 points from the market. For me, the risk is not worth it. But anyway, so after buy side was taken out, the market was kind of consolidating, and that consolidation lead to a bearish SMT divergence at the highs. Let me find that SMT. I cannot see it. Well, it didn't form SMT divergence apparently. But what we have here is we have sell side, right? The SMT low is now our expansion leg low, and then we have the high here before the dump. Now you can take that as your dealing range. You can look at it, it's range equilibrium. Now there is a discount fair value gap. This is on the 15-minute. I'm going to delete this because it's on the 15-minute. I'm not going to take it into consideration. So this is the range EQ, right? And that manipulation happened into range EQ, and you can see how it reacted to range EQ. This is a big reaction, right? So you can expect more buy side delivery once you see this reaction here. And immediately after, it came down to, let me try to find a specific PD. I just see this fair value gap here, maybe like this down close candles CE also here, which is, I wouldn't consider that as an order block anymore because it was violated, but maybe, yeah. And then it rallied, but in that rally, the only entry I can see is, because we already anticipated buy side, could be this fair value gap right there as another buy entry. This is the low hanging fruit objective, and you collapse your trade there. Moving further, market made a new high. Now you have a new dealing range, right? And in that dealing range, this is your expansion high. Sell side is the same, which is the SMT lows. Market rallied. Let's take a look at ES there. I wonder if it formed SMT or not. But yeah, so there is an SMT divergence here at the highs. This is not an SMT divergence on the 1 minute, guys. Please do not make that mistake. This is an SMT divergence on another time frame, probably 15 minute, okay? This is not an SMT on one. This is SMT on 1 minute, okay? Close proximity. This is probably, let me go on the 15 minute, you'll see it better. Here you can see that high on the 15 minute, okay? On the 5 minute as well. So don't take this, don't think that this is a 1 minute SMT. Please, guys, that's a big mistake. So there's a SMT divergence on the higher time frame, which is causing what? It is causing a pullback again, right? I mean, at the time of this formation, you technically don't know whether that's going to end up being a pullback or a reversal targeting the sell side here. Let me change that sell side. So what you need to do is, as I always say, you need to find the dealing range first things first, okay? First step, find the dealing range, okay? Once you establish the dealing range, you need to see how price reacts at the dealing range, okay? If it violates the dealing range with energy, then you can say, okay, this is sell side. This wants to go sell side. This is like trading 100% intraday narrative, okay? This is trading without a bias. Because if you have a bias, you would know whether this is going to be a reversal or a pullback. Now here at this point, you don't know that, and you wait for that pullback into range EQ and see how it reacts. Okay, you don't anticipate whether it's going to break down or not. So it touched here, wicked here, and you can see the reaction right away. It reversed almost immediately and made a huge, I left a huge wick. Now at the time of that wick, ES was rating this, oopsie, was rating this, oh my god, okay, this low here, which caused an SMT divergence. Now that SMT divergence, same deal with the highs. It is not on the 1 minute, okay? The 1 minute SMT will happen something like this, not like this, okay? So this is an SMT divergence on another time frame. When you see this, this is when it's not close proximity, you got to switch time frames, okay? You don't have to anticipate whether that's 5 minute or 15 minute initially. Once you're trained and your eyes are trained, you'll know immediately that this is a 15 minute or hourly or whatever the case is, time frame, SMT divergence. But initially, you don't have to do that when it's not close proximity. Just switch time frames and try to find where the real SMT is. So it was on the 15 minute. So on the 15 minute, the most interesting thing is the dealing range here was at the BPR or fair value gap here, and the fair value gap is in discount actually, and the SMT diverges at the highs, causing that pullback into discount. Now let's go back to one. This is the 15-minute fair value gap in discount. So price comes down there after the pullback or after the rally. It comes down there due to the bullish SMT divergence, rejects it, and leaves an SMT divergence on the bullish side. So that is additional confidence to seek long opportunities. Now, for me, there are no, like, you can aggressively enter on the next candle once it rejects. I personally don't do that, though, as you guys know already. I wait for, depends on the PD, right? If it's accumulation below a fair value gap, I always wait for a trap, and assume a trap will be set, and then I'll long. Or if it's different PDR, you can also wait for 1 minute SMT divergence, just like this one right there. Okay, so there's a CD accumulation below that got inverted here. I think, let me zoom in actually, I'm not sure which candle inverted it. Okay, this candle seems like it traded outside. So that candle confirmed the trap being the accumulation here, all the way down to the wick. Oh, CD trap shorts. Now the low, whether there's an SMT divergence on another time frame or not, is not even relevant because there's a trap. The low should be safe. Now, whenever you're entering, this low will be your stop loss. Okay. Now, because you've already established the bias as being the short-term buy side, here's an SMT divergence on the 15-minute was confirmed with this candle's close right here, and you see the reaction here. as well from the range EQ. Now you can aggressively enter on this order block here. Why? Because if you look at it, it comes down, forms a down close candle, and immediately after that down close candle, this is the lowest down close candle. FYI, don't ask me why it's not this one, this one, this one. It's because this is the lowest one. The candle immediately after kind of engulfed it. Volume imbalance also is there, so you can use this down close candle as your order block. And it is a higher probability order block because you've already established the bias, first of all, and secondly, you're seeing the patterns that you want to see in your anticipations. And then thirdly, there's a rejection block. This is a major influence on this candle being a high probability order block, okay? Because there's rejection block, the low technically should not be violated. Okay, so that makes the down close candle at 124 is a high probability order block, and you can actually utilize an aggressive entry with this wick right there. Once it touches it, you long it. That's the starter position. Once the trap is confirmed, now you can add into your position, targeting the low-hanging fruit objective buy side, which was tagged right there. And that order flow was pretty clean, actually. Trap confirmed, displacement, fair value gap retest, another displacement. Now you have a new order block here. Comes down into a fair value gap plus or B, displacement, another fair value gap, comes down, and eventually displaces. I think here there is a tiny fair value gap as well. Let me see, I'm not sure. I'm bullshitting about that. Let's see. Here, there's no fair value gap there. S&T average is there. Okay. So it completed the second leg with this rally. Now, because the buy side is taken and price is stalling, now you have a new dealing range, like SMT lows from the trap low all the way down to the expansion high. Now you have a new dealing range here. I'm going to copy and paste this. Oh, actually it's here already. Now the dealing range EQ, the new dealing range EQ becomes here. Now any pullback will be into where? It is going to be into range EQ. And any reversal is going to have what? It's going to have a displacement below the range equilibrium, right? Now here, if you look at it, once the price comes into the range EQ, you don't see any displacement. It's actually respecting, right? That is the first confluence. Once you see this, you can say like, okay, market is still in buy model, ditch the sell side ideas, and let's try to find a long, or let's try to tape read the bullish order flow, okay? So here, before the pullback, I want to look at whether there was an SMT at the highs or not. Yeah, there is SMT present. Market, yes, made equal highs. Nasdaq was making high highs here. Kind of weird, but I think this should be. Let me see MES real quick. Equal highs as well. Not the cleanest SMT. Not the cleanest. It is an SMT divergence because I consider equal highs and lows as SMT divergences. I don't trust it, but I consider them as divergences as well, because when you think about it, what divergence really is one asset is making a higher high or higher low, or lower low, lower high, right? Higher low. And the other one here, the one that's making equals, is actually failing to do so. So that's a divergence, right? So that caused the pullback. Market gives another opportunity at the range equilibrium. Now, initial tap is never an entry because you technically don't know whether this is going to be a pullback or a reversal, right? You wait for reaction, you wait for the order flow to change so you can long, right? So here, there's no trap because there's no CB, accumulation, whatever, and the order block is here. So the order flow changes there, but before that, right, it comes down into range EQ 4 times, taps it 4 times, and that tap caused another bullish S&T divergence, meaning the market is setting up here. You can see it with these lows. ES is making lower lows. Nasdaq made a higher low. So that S&T divergence confirms the pullback is over, Now any displacement become after the SMT divergence becomes a long. Here you can see displacement. There's a tiny fair value gap there. You can long that safely, and the stop would be below where? It will be below the S&T low, which is 6.5. And then immediately after that, market rallied. First things first, took out the low-hanging fruit objective, buy side, right? That is your first partial, or you collapse the trade there, up to you, either or is fine. On a day like this, you would like to be taking partials rather quickly, or like be content with low-hanging fruit objectives, right? So takes out the buy side, comes down one more time. Now that pullback is into another range EQ. Now you have new low range low, which is S&T low, all the way to the expansion high. Here you can see it's the same thing all over again. Comes down into range EQ and discount. And here what you have is you have technically a couple things. So there's a breaker block here first of all in discount. Comes down here. Then there is, you can use either or, like everything is fine, whichever you see easiest. Inversion fair value gap, okay, second PD array, and then if you want to use order blocks, this is your order block, so you can use either or. Not that one actually, I would say, actually, yeah, that one. So you can use either or, whichever you see the easiest is fine. There's nothing greater than the other in terms of when it comes to PD arrays. Now pullbacks, rejection, market sends it higher to the buy side. Now that buy side is actually yesterday's high. So eventually it rallied into there, and you can see, let me clean the chart now that it's actually, before cleaning the chart, I'm gonna take a screen. I want to take a screenshot of this real quick to post it in my channel so you guys can have it if you want to. Oops, I don't remember which one is the 15-minute fair value. Okay, this one. First leg dealing range, second leg dealing range, and then third leg dealing range. I'm gonna post it in the channel. Let's make it red, black. I think this is previous day high. Let me put it external PDH here. Let's keep this. You know what? Yeah, okay, I'm gonna keep this as SMT divergence. I mean, you guys are watching the videos anyway, so you can see the trend line, and you can see where I'm pulling out, like getting my dealing ranges. So that's fine. Everything looks good. Sometimes I'm glad I have an ultra wide monitor. I feel like I can't even stand looking at other monitors anymore. First like range, EQ, blah blah blah. Looking if I missed anything. Boom. There is the breaker block here. I'm gonna annotate that as well. Plus breaker, because that was the catalyst for the third leg. So I'm gonna keep that on the chart as well. Trap confirmed. Boom, boom, boom. Cool. So I was gonna say, now I can delete it all. Not all. Here. As you can see, guys, I mentioned this in the morning session during the live stream. Rejection block. That tells a lot of things, and that indicates a lot. Okay, because if market is setting up a rejection block after taking a sell side within a fair value gap, what does it tell you? Like for me, it indicates once the expansion happens, it's not going to come down for the sell side. Okay, this sell side should be safe. That's what it tells me. Okay, and as you can see here, I'm going to go on. I'm going to start from. Let me check daily. Actually, never mind. Not on the daily. I'm going to start with the 4 hourly. 4 hourly rejection block it's there. hourly rejection block. It's there, same level. Then 15-minute rejection block, there. Then go on the 5-minute rejection, it's there. So this, and there is on the 1 minute also. What this tells me is if you're seeking sell side on a day like this, ditch the idea. Once you spot that, ditch it. And another thing is if you're watching price or like order flow on any time frame really, let's say you're watching this price action on this time frame, doesn't matter which time frame it is, you're looking for the sell side, you want to short it, right? Now you see this maybe as a point POI, right? Like for example, accumulation, manipulation, right? Then you expect a distribution below the low. But here's the thing, and I think this is an important point, honestly. So you wait for a displacement. Now you have the displacement. There's a fair value gap here, right? And that fair value gap is in, I think it's in discount or premium. The upper portion is in premium. Now here's the thing though. If price forms a rejection box right below a fair value gap, do you really think that fair value gap is a high probability fair value gap? I strongly disagree. It is not a high probability fair value gap, and I've hurt myself before for overlooking this. Sometimes I don't see the rejection block and thinking, oh, this is going to go lower. I should utilize the fair value gap. I go short, get hurt. Now, um, sometimes I miss that info. I don't see the rejection block. But if I see it, I look at this fair value gap as a potential trap or an inversion right away. Okay, so if you have questions regarding like, oh my god, which fair value gap I should use, why is this a high probability, how can I know whether a fair value gap is a high probability or not, this is an answer. This is one of your answers that you've been seeking for since you met ICT's content. And I don't think anyone will talk about this. In fact, I don't know if anyone knows about this, honestly. Um, but yeah, um, so that's that. And let me check crude oil. Going into tomorrow, I don't know what's going to happen. We had a breakout, so I'm expecting a continuation to the high, to the upside, but we'll see. Look, same deal here. Rejection block, send it. Um, well, we'll see. Like I said, I don't know what's going to happen. I am not looking for sell side delivery as of, like, at least for now, because it's still going higher. There's no need to seek shorts. For me to seek short as a day trade, not a scalp, but a day trade, I need to see an accumulation first, and SPT divergence, and maybe a breakout. Okay, unless it's there, I'm not looking for shorts. Before wrapping this up, because there is Nvidia has ER tomorrow in the after hours, I'm gonna look at Nvidia and gonna give me my thoughts about it. Although I'm not really good with ER, I believe it's still following the technicals and the algorithm. So let me look at on the 4 hourly. Okay. Look at it on the weekly first. A weekly gap up. Interesting. So, guys, here's the thing. The fair value gap here. Let me see it on the daily. 1 second before I say anything. Okay, so this is discount fair value gap. Cool. This is discount fair value gap and range EQ. As you can see, if I put the 4 hourly, you'll see it better. But first things first, let me just keep it on the daily. Price actually came down into range EQ and seek discount, right, and had a reaction there. Now there is an accumulation there as well. Inverted, retest, send it higher. So I'm expecting higher pricing. I'm bullish on Nvidia ER. I think it's going to pump the market a little bit in the after hours. You can look at -1 here. It's definitely going to take out the low-hanging fruit objective, or whatever you call it, external liquidity, whatever you call it. Looks good. If it doesn't take that out, if it pulls back before, this is what you need to look at. This range, volume balance here, that'll do the job. But yeah, so far that's that. Let me check crude oil real quick. I want to see crude really pumping, which is not happening right now. Is this? I feel like it's forming an R block. The reason I'm taking this one instead of this one is because this has the lowest low, the lowest down close candle, so I'm taking this one, mean threshold. I feel like this is gonna like eventually flip the daily fair value gap in my opinion. It seems like it will, honestly, because I don't know. I might be wrong, but as long as it accumulates below that fair value gap, I'll be thinking bullish. If it breaks the range down to the downside, then I'll ditch that idea. But yeah, anyways, guys, I think the highs looks very juicy, and I think this is setting up for a second stage reaccumulation on the daily chart. This is should be massive. But anyways, guys, thanks for being here with me. I'll talk to you tomorrow. Take care.